Hey traders, happy Monday to you. Akil Stokes here, head currency trader with Trade Empowered, and welcome to something that may become a new routine thing, chart of the week. If you guys are familiar with my weekend review video, you notice that this week I said I want to try something new. I want to take questions from you guys about what chart is giving you problems, what chart do you have a question about, and what I do is I look at it over the weekend, break it down and really give you my opinion on what I think is going to happen and how I would look to trade it if there's a trade possibility on there. Now I got a few questions this week, and the one that I chose is going to be the Euro New Zealand 4-hour chart. And the trader that asked me to look at this chart said, Akil, he said, to me, it looks just like a mess with consolidation and huge wicks going all the way from October to November. And you know what? I'm seeing the exact same thing. This is a very ugly chart, and it's kind of one of the reasons I chose it. I want to give I like giving myself a challenge. It's like a brain exercise to break down these ugly charts and see if there's anything we can pull from it. Sometimes there is, sometimes there isn't. But you're 100% correct. We have ugly movement on this chart, and the first thing I want to do is I want to get a read for what Euro New Zealand is actually doing, and I hopped all the way out to the weekly. I typically don't go this far out, but it was really hard to tell. And even on the weekly, what it looks like is we've been in this bearish trend. We've come down, we've bottomed, we've double bottomed right here, and we're putting in some type of 26-18 action here. So we've put in a double bottom at the bottoms here. We've then broken and closed below or above structure, and looks like we're retesting that level. So overall, I would say bearish, but our most recent move is we're seeing some type of bullish rotation here. So really didn't get any help from the weekly. The daily didn't give me much help either. Again, we're putting in a lot of areas of consolidation. So a lot of ugly price movement here. You can see the market channeling right here, consolidating, dipping down, consolidating, consolidating, consolidating. It seems like every time we get a breakout in one direction, we come right into consolidation, which is normal, but we're seeing it more than expected at these levels. So I went I'll say this. One thing that did catch my attention here on the daily is just the wicks at this level. We're looking at consolidation, and we want to get an idea of which way the market is inclined to break out to. And I actually remember trading some of these in the live room, and not the live room, but in the syndicate a month or so ago. But when you're looking at this consolidation level, we're seeing most of the wicks or the shadows are to the high side, guys. And look at this, wicks, wicks, wicks. Most of them are to the high side. We have some to the low side, but most are to the high side. And what this is telling me is there's a lot of selling pressure up here, and there's no surprise we broke out to the downside. Why that's important is because as we come up to that level again, you can see we're starting to do the same thing. We break out to the downside, we come back up to retest this consolidation, and look at that. Doji candle, a sign of indecision, and we get another wick that tries to push up to this high side again, same level as our previous wicks, and gets rejected. So although we're in sort of a bullish rotation here on this pair, I really don't expect a breakout to the high side. I don't expect a breakout up. What I expect is, I expect what we see right now in the chart, a lot of consolidation. And I'll get back to that in a minute. Now, recently, just structurally, just technically speaking, our recent move is this. We've got a swing low to swing high here. I'm going to get the right tool on here. We've got a swing low to swing high here. We double top at this level. Here's the wick I showed you on the daily. We then break and close below that double top. Now, for you guys that have been with me for a while, either in the live room, the syndicate, or of course the 12-week transformation, what are we expecting from this formation right here? Double top, break and close below. What's the next thing we would expect? Give me some time to sip my juice and try to get rid of my Monday morning voice. But yeah, we would expect a 26-18 trade. And I bet if we take a Fibonacci retracement, it looks like we're going to be right at it, or at least very close. Fibonacci retracement, swing high to swing low. Bam. 618 retracement, right at previous structure, right at these wicks. And we ran right into it and got rejected. Now, although this is a 26-18 trade, this is not particularly one I would take. Reason being is, well, first is the risk reward. If we're looking at getting involved in this trade at a short position, right at the 618, where do stops need to be? We know stops need to be above our previous structure high. So stop needs to be above this wick right here. Targets would have to be at a retested structure lows. So we're only really getting about a 1-to-1 on this type of trade, which is fine. But typically I like having a much better risk reward on trades I don't feel too comfortable about. It's kind of a rule of thumb if you've been with me for a while. The higher the probability to trade, or the riskier to trade, the better risk reward ratio I need to have to take it. If it's a high probability trade, if it's a low risk reward, I should say, it needs to be a very high probability trade. And one of the reasons this isn't a very high probability trade is, well, again, from the weekly, we are in bullish rotation here. We're in bullish rotation. Again, if I just go back out to the daily one more time and take a look at this, let's kind of delete the mess I drew on here. What are you seeing? You're seeing, right? New structure low, outside return, new structure low. We don't get an outside return. We can get a mini one in here. But then what do we get here? A new structure high, higher close. This is the first sign of a bearish or a bullish rotation. Also look at these bottoms. Higher low, higher low, higher low. So I'm not too inclined to expect a retracement to this downside. What I would expect, again, is more consolidation. If I go down to the 4-hour, I would expect the market to retest these structure highs somewhere in this level, hopefully, if we're lucky, retest these structure highs and kind of stay in a zone, really between these two levels right here. I'll draw a line on, that's going to be a little easier to see. But these two levels right here, even if we look back in the past, you see there's a lot of structure, there's a lot of support, which was resistance that was support at this level. So it really wouldn't shock me if the market gave us more consolidation and bounced between this zone. Now, saying consolidation, Akil, isn't that just messy movement? Well, yeah, but it also offers a few opportunities. Within consolidation, we have advanced patterns, so if you go down to a lower time frame, if we decide to go sideways, you may see a lot of advanced patterns inside this area. And even if you look to trade this back and forth between these structure zones, well, guess what? There's about 100 pip range in here. We're looking at a move right now. Our previous structure support is down at 160s. We're looking at 161s up here, even close to getting close to 162s. So there's 100 pips of range here that you can trade back and forth and take 30 pips, 50 pips at a time. You can take advantage of it. So that's what I would expect from this. Let's just go one more time frame down frame. There we go. Monday. Let's go one more time frame down and see if we can find a place for entry. Now, first thing I want to do, and I'll do this real quick, I always want to bring a Fibonacci extension on. So let's take a Fibonacci extension from our swing low to swing high here, see what we get. Boom. Going to get a 127 right in that structure zone, so right at previous structure resistance up here. And let's do this. Let's take a Fibonacci inversion. So let's invert this inside leg. Let's go from here to here. And let's see if we get, look at that. 1618 Fibonacci inversion lining up right with a 127 Fibonacci extension. So if we come up to 6150s, I think that's an excellent opportunity to look for a sell. Our risk can be in the same place as that 2618 opportunity. So our risk can be up here, right above previous structure. And even if you're playing this right across the range, back down to previous structure here, you can see that risk reward is going to be a lot better than what we talked about before. And hey, you can, even if you want to take this as a 2618 trade, you're just getting the better and better risk reward. But I would definitely look to get involved somewhere here at the highs. We have a structure zone drawn out. We've got Fibonacci confluence. I take the time, look at the RSI, run through the rest of your CTS checklist, and then look for that case to entry. Look for that case for entry. So that's what I'm seeing right now here on Euro New Zealand. Let me just see something. Yeah, we're not going to have a Gartley pattern. That's what I'm seeing here on Euro New Zealand. Looking for a move back up to previous structure, and then probably some consolidation until we get a news release, maybe Tuesday, Wednesday. I haven't looked at the news events this week yet, but until we see something that's going to break us out. So there you go. That's it. Chart of the week. Thank you for you guys that submitted questions. We'll come back to it and we'll try it again next week, assuming this gets a good response. But I've got to go prep for my 12-week transformation training. So until next time, plan your trade your plan. Oh, real quick, if you like this type of stuff, if you like breaking down the charts, I want you to go to tradeempowered.com/ if I can spell it right, /syndicate. Let's see if that takes us to the right page. Bang, there we go. tradeempowered.com/syndicate. If you like this type of stuff, breaking down charts, Jason and I do this every day. Jason has his war room meeting where he shows you his best ideas for the day and explains exactly why he's taking it, where he's expecting the market to go to, or what the move is, what the projected move is. And then I do the same thing. I'll shoot a few ideas through our trade floor desktop software, some intraday ideas. So looking mainly at charts from the 15-minute charts to the 60. And then for the higher time frame stuff, I'll record usually about 2 videos a day. Not 2 videos a day. Wow. 2 videos a week showing you what's on my higher time frame radar, such as this Euro New Zealand. And it all depends on how the week goes. If it's a busy week, you may get more than 2 videos. If it's a slow week, you may just get 1. But go over to tradeempowered.com/syndicate. Check it out. See if it's something you like. And hey, give it a try. So until next time, traders, plan your trade your plan. I will see you guys later in the week.